Hey traders, Richard here and welcome back to another price pattern video. In this video, we're going to be looking at both ascending and descending triangles. On my screen here, I've got an actual ascending triangle that formed. This time it was on crude oil, and later we'll look at a descending triangle as well. Now, from a previous video, I first started with the symmetrical triangle. So just to give you a quick recap, what that looks like is basically symmetrical triangles have angular top and bottom trend lines, right? I'll just grab my path tool quickly. For example, in an uptrend, you'll get price moving upwards and then starts off with, as a price moves low or counter trend, starts off with a pretty large range, and then that range will then get smaller and smaller as it contracts into the ending or final part of the pattern before you get a trend continuation. So the symmetrical triangle can be present or present itself in both bullish and bearish markets. Right now, if we have to look at what a ascending triangle looks like, I've gotten one that's actually formed here, as I mentioned, on crude oil. It can be on any market or any time frame. But simply put here, we've had a situation where price has been in a very strong trend upwards. It then reached a point where price moved counter trend and then start making, upwards and downwards type of zigzags until it finally broke out back to the upside. Now, what makes ascending triangles different than symmetrical triangles is they typically a bullish type of continuation pattern. And you'll typically have the top part of where the correction actually starts from. Rather than have a symmetrical form, you'll have a horizontal resistance zone. Sometimes, it doesn't have to be perfect where price reaches a line like this little wick over here. Actually went a little bit over the previous high where this correction started from, and similarly over here as well, a little bit over, but it found resistance within an area and then moved lower again. Now, if you look at the lower parts or the higher lows of this pattern, you'll have an angular, in this case, trend line. So this gives us the shape of an ascending triangle. Again, with these type of patterns, just familiarize yourself, especially if you're a beginner or novice trader and you want to learn more about patterns. Just try to figure out or get to know what the actual entire shape of the pattern looks like. Now, similarly to symmetrical triangles, with both your ascending and your descending triangles, you'll also have 5 internal waves. All right, so but it's just the entire shape of the actual upper and the lower trend lines that differ from your symmetrical triangles. All right, so again, same as your symmetrical triangles, you also have 5 internal waves before you actually get a breakout to the upside. Now, how would you label that? If you can remember from the previous video that I did, you'll get price move into the high, and that first wave lower will be your A wave. The second one, in this case with an ascending triangle, would fall in sort of the same zone or end at the same level, sort of ish, as where the correction started from, and that will be your B wave. You'll get another move lower. That would be your C wave. A D wave, and then finally an final E wave to the downside before price finds support in this case and makes a breakout to the upside. All right, so ascending triangles, some traders might call these wedges. Whatever it is you like to call it, that is typically what the pattern looks like. So with ascending triangles, you've got a horizontal forming top and sometimes a bit more of an upward type of sloping line as well. All right, but generally speaking, these patterns won't always be 100% horizontal on top. It might be angular sloping to the top or the top side of the trend line. But very importantly, your lower ends typically creates higher highs during an ascending triangle formation. All right, next up we have a descending triangle formation. This time, as an example, it appeared on gold. and are in a downtrend. Now, descending triangles typically occur during downtrends, and then they're also a type of a bearish continuation pattern. Now, again, I've marked out an area here where a descending triangle formed. And to start the actual drawings or to show you the actual formation, we've got a situation where price moved lower. Let me first get my path tool out. During a trend, price finds support and starts making its way up, makes its way lower, makes its way up, makes its way lower, makes its way up, and then finally we get a breakout back to the downside again. Now, if we have to define the actual shape of the descending triangle, what's different from the ascending triangle, in this case, your descending triangle will have a lower horizontal trend line, all right? And your upper trend line would be angular, all right? So your upper end would be making lower highs, and your lower sort of one would be very close to horizontal. Again, things in trading not always picture perfect. As long as you have an area or a zone where price, in this case with a descending triangle, finds support and struggles to break through a zone or a level, and it starts making a contracting type of ranging move as price makes its way during formation before a breakout, then you're most typically dealing with a descending triangle. Now, similar to the ascending as well as your symmetrical triangle, you'll also have the internal five-wave structure of an A, a B, a C, a D, and E before price then finds support in this case, or resistance in this case, and then a breakout down to the downside again. Right, again, not picture perfect. We have one of these waves that actually broke below the start of the actual correction, but price didn't close very far below it and actually left a wick there. This is a beautiful formation over here. This was actually during the D wave before you got that final E wave that bounced higher again, found resistance in this scenario and moved lower again. Now, quickly just to label that, price moves lower during the single triangle or descending triangle, sorry, you get your A wave, you get your B wave that sort of terminates at the beginning of where the triangle started from or the correction started from. You'll have your C wave, D wave, and then finally your E wave or your internal wave structure, and then you get a continuation of the actual trend. Now, I didn't show you this on the ascending triangle, but I've shown you on a symmetrical triangle. Typically, these end of these internal waves find support or resistance at Fibonacci levels. So we can do the same here. It will be the same for ascending triangle. But if you were to go grab your Fibonacci retracement tool, you'll typically find, because you got, in this case with a descending triangle, a horizontal lower level. If you were to draw between the A and the B waves, you'll typically find that your C wave will end at a 50% or 61.8. In some cases, a 61.8% retracement. And then what you want to do is also, if you're anticipating that you might be dealing with the final end of a descending triangle after you've seen especially price bouncing off a horizontal level on the downside, then if you measure from your end of your C wave to the end of your D wave, oops, and that's actually the wrong tool. Let me just get the right one here for you guys. There we go. C wave to the D wave. Then we also have a 50% retracement. Quite often, if you're from B to C wave, or sorry, your A to B wave, your C wave finds resistance at, let's say, 50 or 61.8, then typically it will repeat again with the next D to E wave, if that makes sense. So quite often you'll have a repetition of those levels during these internal waves where they find support resistance, depending on which triangle you're dealing with, where they'll typically find support resistance at the same Fibonacci retracement levels. Right, so that was your ascending and descending triangle. Hopefully this information helped you guys out. And go onto your charts, see if you can find some of these formations. Again, they won't always be picture perfect, but hopefully some of the information I shared and the behavior that they tend to show will help you see them much better on your chart. And when they do next time form on your chart, give you a better idea of what direction the market might be moving in, and potentially help you formulate a trading strategy around that. Right, so that was now a symmetrical triangle in the previous video, ascending, descending triangle in this video, and then during the next video, we'll finish off the triangle formations with an expanding triangle, which is a very volatile type of pattern. It doesn't contract to end. You have waves that actually expand above and below each other, and they typically form during very volatile times. And also they're called megaphone patterns, which is also a familiar name for them. But I'll end things here. Thanks for watching, and we'll look at the expanding triangles for megaphone patterns in a next video. Take care and goodbye.